Hello, I'm Jeff Kilberg, founder and CEO of KKM Financial. I'd like to do a deeper dive today on the iShares Tactical Rotation ETF Model Portfolio, which is powered by Nasdaq Dorsey Wright. I have Jay Gragnani as well as Ian Saunders, Senior Dorsey Wright Analyst, to do a deeper dive on the methodology. If you're looking for more information on how to access this ETF model portfolio, visit us at kkmmodels.com, send us an email at info@kkmfinancial.com, or simply call us here in Chicago, 312-448-7230. Without further ado, take it away, Jay.
Welcome. Thank you for joining our discussion today on the iShares Tactical ETF model. My name is Jay Gragnani, and here joining me today is Ian Saunders. And what the goal of this discussion is to highlight the iShares Tactical ETF model. This is one of the models that really began our history in the ETF model business, going all the way back to 2002. We started with a couple of different models. One was a sector rotation strategy, and one was what is now the iShares Tactical model. And the design and the goal of the model is to utilize an inventory of exchange traded funds, of ETFs, and use those ETFs to identify leadership trends in the marketplace, mostly looking at equities, but also having the ability to rotate into other asset classes as those opportunities present themselves. And so very simply, what we're looking at is an inventory of ETFs, and the goal of that portfolio is to own 8 of the strongest ETFs out of that inventory over time, and come back and evaluate that process on a weekly basis. And we'll talk a little bit about our relative strength ranking process of identifying those leadership trends in the market. But really the goal of this portfolio is to be 100% invested in generally bullish configured equity markets. However, the portfolio does have the ability to move into a defensive position of about 30% into a core aggregate bond position. If the general relative strength of the market turns weak against bonds, then bonds have the ability to account for 30% of the portfolio. The other 70% would then be allocated to the 8 names that are deemed as the leadership trends in the marketplace. And when there's a change, the portfolio gets rebalanced upon each change upon the weekly evaluation. So if we look at a breakdown, what we're looking at here is the current inventory list. If we look at a breakdown across asset classes, there is always going to be at least about 35% invested in U.S. equities. That U.S. equity exposure could go all the way up to 100% if all of the leadership trends are in that area of the market. International has the ability to rotate in there. It could get up to a little over 12%, but doesn't have to be included if there's no strong leadership trends there. Similarly, commodities as well as fixed income both have minimums. There's no mandate to be invested in those asset classes, but they could get up to a percentage of about 37% potentially for commodities. There's a gold position, a silver position, and a broad-based commodity position that has the ability to move in there, as well as fixed income. Again, as we mentioned earlier, if we see the relative strength of the general U.S. equity market pull back versus bonds, we can see bonds rotate into that portfolio from there. But that's just kind of a high-level overview of, number one, the inventory of the model, how that model can be allocated across various asset classes. And before we look at that historically, in terms of what we've actually seen in terms of an asset allocation of the strategy, Ian, let's dig in a little bit and talk a little bit about relative strength, which at the end of the day, the relative strength methodology, it is what is driving the investment allocations that either go into the portfolio or ultimately those rotations out of the portfolio as well.
Absolutely, Jay. So when looking at relative strength is one of the 2 main kinds of analysis that we look at here at Nasdaq Dorsey Wright. The first kind of analysis being trend analysis. So how is the security doing in and of itself? Is it moving higher? Is it moving lower? And then we have the relative strength side of things. So instead of just looking at a security A going up or down, well, how is security A performing against security B? Which one would you be better off in? If they played a game against one another, looking at a sports analogy, who would win that matchup, right? And so how we look at that matchup is through what we call a relative strength calculation, which is simply going to be taking the closing price of an investment A, divide that by the closing price of investment B, multiply that by 100, and that gives us what we call a relative strength reading, or as you can think of it as a score in a game. So one team or one investment would score a point. And that score in and of itself doesn't necessarily decide the outcome of that game. But what it does is when we get multiple scores or multiple calculations, and we're able to chart those on a point and figure chart, is where we're able to actually see who wins that matchup. And when we chart this reading on a point and figure chart on the site, we're able to get a buy signal or a sell signal. If we get a buy signal on that chart, that's indicating that investment A wins the matchup over B. If we get a sell signal, that means that investment B is winning that matchup over A. And looking at that calculation as it continues to rise, gives the buy signal, that means that A is outperforming B, and that's a place that we would want to be in for the foreseeable future. We then take this a step further with what we call the relative strength matrix concept, which is going to be used in the background methodology behind the iShares tactical model with those inventory constituents that we covered a couple slides ago. And we simply take all of these names and stack each of them up against one another on a relative strength basis on their own individual relative strength charts. So having each member of the inventory play a game against every other member of the inventory to see which one wins the most of those matchups, which one wins the most of those games, and those are the securities that are going to be held in the model. So in carrying that over to and looking at that from an application standpoint, taking it back to the initial two kinds of analysis that we look at, the first being that trend analysis. Typically, we're looking to buy things after signs of strength have been established, after it shows improvement against other areas, and we're able to move into the security. And then we're looking to sell things after it shows signs of weakness. So while it would be great to get into the absolute bottom, get out at the absolute top, we have to have some kind of signals that we're able to use to indicate, hey, this is a good time to buy the security A, and this is a good time to go ahead and get out of that name. And instead of simply selling out of that security and moving to the sideline and then looking for another investment across the market landscape to hold, we are able to pass that baton off using relative strength, selling out of security A and moving into another security when comparing them against one another on a relative strength basis. And this can be thought of as in looking at the relay race perspective. It's a lot more efficient and faster to run 400 meters with 4 people rather than just one person. They're able to pass that baton, continue the race, and do that in a more efficient manner. And in looking at how we're able to use that through the iShares tactical model, we're doing the same thing. We're looking for securities to pass the baton off to other areas and look at how they move in and out of the portfolio over time, depending upon the market environment. So this particular image here is looking at historical allocations from the beginning of 2014 through February of this year, and to see which areas, which asset classes across the market the model would have held at particular timeframes. We can see that we actually had fixed income come into the portfolio by nature of that initial relative strength comparison that Jay covered, with AGG coming into the portfolio in 2015 and then again in 2016. Most recently, we had AGG come into the portfolio. If you thinking back to the fourth quarter of 2018, obviously was a very tumultuous market environment that we had AGG come into the portfolio in October of 2018, and it remained in the portfolio until mid-January. So trying to utilize that concept of relative strength to move to shrink the exposure towards the more risk-on domestic equity focus and increase that fixed income exposure during times when the portfolio might need it most. We also saw in the March of 2020 timeframe where AGG came into the portfolio for essentially the month of March. It came in early March and then came back out in early April. And over that timeframe as well, when equities were a little more out of favor, we also had commodity that come into the model too, with exposure towards gold and silver throughout each of those timeframes. So it can definitely be interesting to go back and take a look at the relative strength from a historical perspective and see how this would have played out over differing market timeframes that might be a little bit different than what we're seeing now, Jay.
Yeah, and I think that's important. I mean, when we go back, and obviously 2020 was a very challenging year on many different fronts, and that bond piece to the portfolio, whether it's 2020, whether you mentioned the 18 time period, 15, 16 time period, it's designed to simply de-risk the portfolio by a piece of the overall allocation in times of heightened levels of volatility. And that's certainly what we saw as it relates to 2020 with bonds as well as precious metals coming into the portfolio. So as you were seeing a flight to safety there at the early part of the year, saw some of those rotations actually show up in the iShares tactical model, but then very quickly move back to a more risk-on posture with respect to those allocations. So if we look at the portfolio holdings today, we're looking at an allocation that is 100% invested in U.S. equities. And even this year, we mentioned at the beginning is that this model is evaluated on a weekly basis. So in theory, there's the ability to have 52 changes per year. Now, that doesn't happen. We will go through periods like 2020 where you'll see a bunch of changes at once and in very short order. And then as those trends play out, as those trends continue to move, we might go a number of months without seeing any changes. With that said, we have seen a couple of changes so far in 2021. Namely, those changes are seeing a reduction of the overall exposure to technology by selling one of the technology positions, as well as a reduction to large cap with small cap IGR moving in there. So those are the two primary changes that we've seen this year, which those are very consistent with the trends that we've been seeing in the market. Not that technology has lost its leadership position overall. We continue to see exposure via semiconductors right now as an example within technology, just that we're seeing other areas begin to move up, like energy, which moved into the portfolio this year, like small caps, which we mentioned we've seen some additions to small cap exposure in the portfolio this year. So if we look at the holdings currently today as of mid-February 2021, these are the holdings, the 8 positions that we see in the portfolio, with an overweight towards industrials, consumer, discretionary, the 2 biggest sectors, technology, healthcare, energy, also all double-digit weights within the portfolio today. You can see down there performance numbers, year to date, 1 year, 3, 5, 10, as well as since inception. And as I mentioned, this is one of the original models that we have had on the platform going all the way back to 2003. So a lot of history, a lot of longevity, not only in the products that are being utilized inside of those models, which have been around for a long time, but the model has also been around for a long time. Additionally, for those of you who are interested in accessing the iShares tactical model or a number of other tactical rotation models through a managed account option, we do have a partnership with KKM Financials that has these models that are available on a number of UMA platforms. So you can visit KKM Financial and find out which platforms that they're available. Also, you can reach out directly to them to find out more information with that. Thank you, everybody, for your time.